let's just talk about ways to be subjective using verticals. You have subjectivities in the way you enter. You have subjectivities in the way you adjust. You have subjectivity that you can add in to the way that you exit. Obviously, if you're going to be subjective, what comes to mind first is... Before we get rolling here, just a reminder to please like and share our videos. Your support helps us to continue to bring you the wonderful content that we share with you each and every week. Entry timing. Do I want to stay in the market all the time in a consistently direction vertical? Do I want to just enter when my opportunities are really high, directional either way? Do I want to stay in the market all the time bearish in a vertical, which won't work out well for you? I can tell you that. But how are we trading? If your only trading strategy is to do a vertical and that direction is always bullish and you want to be in the market all the time, I mean, that kind of limits you. So you're going to be entering the market at times that are not beneficial for you to be in a bullish vertical. I mean, it just makes sense. When I'm doing a bullish vertical and I want to be in the market most of the time, I wouldn't recommend being in a bullish vertical all the time in the market. But if I want to be in a bullish vertical most of the time, I just want to avoid the times when there's a high likelihood the price is going to go against me, because that's the weakness of the strategy. So you're going to have that timing issue going on. The other one is the location of the vertical. A lot of people say, I want to do 10 delta short strike or a 30 delta short strike or whatever. But the reality is it doesn't make sense to always have the location in the same place. If I have high probabilities of large price movements, I want low risk. Even if I don't know what direction they're going in, I want low risk, high reward. My location of my vertical, if they were call verticals, for example, they would be way above the money. If I'm more in a spot where I believe the market's going to be more neutral, then maybe I do want to be in a 30 delta short strike or something like that. If I think the market has a high risk of going down hard, I really don't want to be in it at all. But also, if I thought that, I'd actually go ahead of the market, because if I think there's a high risk it's going to go against me off the initial initiation of the trade, I still want to be call verticals above the money, like very low risk, very high reward potential. So there are locations, and that may change during the trade. We have our sizing. Do I want to size really big? Do I want to size really small? We always size according to our fully acceptable risk that we're willing to take to get in there. I can scale into my vertical. Feel free to comment on any of these, Stephen. But I can scale into my vertical if I don't think I have any probability, or if I'm really concerned about a particular down move due to the technical situation, then maybe I want to enter it half my normal size, maybe a third, maybe a tenth, who knows. Again, there's disadvantages and advantages to all of these. But if I think I have a really high probability the market's going up, a very low probability it's continuing down, I want to hit it hard, right? We have our vertical width. Vertical widths have different characteristics. Basically, the wider your vertical is, the more it acts like a call or a put, depending on whether you're using calls or puts, the narrower it is. And by that, I mean, let's say I buy a call at the money. It's going to take a certain distance because I'm buying time premium. It's going to take a certain magnitude of market movement in my direction in order to be profitable on that at the expiration line. So if you think about the expiration line of a call, the break-even point's pretty far above where you are now if you bought at the money. If you do a vertical, you're selling some time premium, and that brings that line closer. It also caps your profits, so you have that trade-off. If you go into a very tight vertical, you almost make money right away at the expiration line if the market goes up.